We're looking at the time when to buy iron ore miners on the ASX. They've been rallying since November 2021 and showed two clusters of breakouts with one prolonged stretch of breakouts. Now we're unpacking the strength and resilience of this theme to understand where and how to trade the best iron ore miners on the ASX today. This is going to use a range of proprietary indicators to understand how the iron ore shares move and trade together and individually. Now, first, we're going to start off with the top 10. So we'll jump into this page here and have a look at how they've ranked. Broaden this out so we can see the chart, see if we can bring this to a greater picture. There we go. So we've got 13 here. We often just run with 10, but sometimes there are some anomalies in there that throw it out, such as what we've got in rank number 5. But what we're seeing here is the best ones have been Vulcan Steel, number 1, VSL, Equinox. We've got PFE. Then what was CAP becomes Horsens, HIO. That's an interesting one because they've had a cup and handle from May 21 through to April 22. We'll put that on screen to see that. So May 21, we'll zoom out. We'll have to put this on 2 years to see that full movement. We can see April, May, June. So rounds this and then creates a handle and then shoots up. So that's the cup and handle for HIO. We also then see a volatility contraction pattern between January 22 and March 22. So what we see this one here, a rally 10 to 20 cents, runs up, but then we're also seeing it here March where it's running right now. Now, high and tight flags is a pattern that we've covered in great detail. We've got a video on that. So have a look, click on the link in the description below if you want to learn more on high and tight flags. We also have other leaders in the group. We've got EFE, then RHI, MDX, and then another high and tight flag with RGL. We'll put that on screen. This is what we're looking at here, coming from 2 cents all the way up through 5, 6, coming up to 11, and then congesting above 7 cents. That is more than 100% rally, and it is holding more than halfway in that recent rally. That's a high and tight flag and sitting on our short list. Other ones that we're going to see in the list is MDX, RGL, and GRR. We like GRR because it is a phenomenal chart for a few reasons. So we see here in our notes, we've got June 21 of VCP. So we'll have a look at that. June 21, here we go. We're going to bring it out to 2 years so you can see how that VCP is being created. June 21, here it is. So it's rallied, come up, congested, turned sideways, while volatile, but created itself a volatility contraction pattern. Now VCP, having it so rallies and then contracts, 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 and see it getting tighter and the volume getting lighter. This is a pattern in itself that Mark Minervini has used to win 4 US trading championships. And we've covered that, got a book summary for some of his books and a download as well to understand and unpack how to use that in today's market. But that's the VCP that sees the rally come on out. Other one for Grange, GRR. We saw the high and tight flag in July 21, which is what we're seeing here, 45 cents coming up, almost 100% rise, but it failed. Doesn't break out and continue running, cascades back down to earth. Now that's July 21, VCP becomes in November 21. This is where it really gets interesting for this theme that we're looking at and unpacking today. So that leads into the cup and handle of February 22 and then a high and tight flag in April 22. Let's move through to the VCP of November 21. October, we've come down, we've dropped, we've rallied, but we've failed to get back over that 50-day moving average. Coming under the 200-day moving average, the red line, 50 days the green. Congesting, but the rallies and falls and pullbacks are getting smaller and tighter, and we want to see the volume drawing up as well. As we're coming into November, we see really tight ranges here, and then turns a corner. If you're looking from a volume price analysis perspective, this really dries up, turns a corner, and then shoots up over the 200-day moving average with a strong candle and good volume. This creates the VCP that becomes the breakout, throws back, retests it, only for a couple of days before turning around and shooting back up, and off it goes. That leads into the cup and handle of February 22. We're in December so far. We're running up the right-hand side, coming back in for the handle. Let's zoom out to get this. We've got the cup and handle February 22, March, February. So there's your cup, there's your handle, and then it breaks out, it continues to rally throughout February. And then that can run into a high and tight flag. It's not the best high tight flag that we're seeing because it's coming from 90 cents. This can become a flagpole, but this flagpole here, this fails. It doesn't rally enough and then pulls back down. But that's the top 10, and we want to understand how this rally progresses and how one iron ore company breaking out can lead to another one pushing on. That's the domino effect that we're really wanting to study. These consistent themes, as we're seeing them break out, that's what we surface in Shares in Play with the top sixes. You can subscribe to get those updates that come on through. We're consistently surfacing them each week. We also notice on the list there's a fair few IPOs. That's what Mark Minervini and William O'Neill noted as being some good opportunities in the market when new companies are coming to the market. It's not a given that they're going to make money, but we do like to track that when we're plotting themes as well. Now, as that list goes through, when they're breaking out of these bases, that's when they're coming up in the launchpad stocks. They're being highly ranked, and that's what we're filtering. And we'll show you some parts of the proprietary indicators that surface those companies, and they come out on Fridays with a 30-30 list. But we're going to move through these. So let's move over to have a look at how this industry comes in play. We move back out of here, out of the top 10 performers, because we're not going to drill down into that proprietary indicator today. We'll come over here, and as we move through, it's good to get a context on the timeline here. This is a great time. So we've walked through Grange and had a look at all the fits and spurts, the VCPs, but let's have a look at the commodity itself. If we have a look and understand how the futures contract has moved, that's going to end the ASX companies at the same time. That gives us a good understanding of what we're trading here, because it's rare for an iron ore company to break out and shoot the lights out when the iron ore price is tanking, as we see on the left-hand side of this chart. However, we did see that in November, on the 11th of November, Fortescue Metals was the first one with the volatility contraction breakout. This is the first blue wedge or arrow on the left-hand side. That leads into the domino effect that runs in through to January of consistent breakouts of iron ore companies on the ASX. That's what we're looking at here. Now, this moves in. The first cluster is where the launch pad really starts to identify this thematic is something that we want to be looking at, because they do run together. We've looked at how this is not just iron ore. We've looked at it in detail for how lithium companies have moved in the last couple of weeks and months. That's a study we did last week. And we also studied lithium companies back in May 2021, where it ran for about 2 months. We just saw VCPs, congestion patterns all breaking out from May through to August, one after another. This is kind of what we've got here in the middle of the chart for iron ore companies. So it's not just iron ore. But what we do see is this domino effect. So this is the front month for the 62% iron ore China futures in the continuous front month current contract. Now, this tells us the importance of monitoring the theme and understanding the health of the trend and the metrics of this peers or the sister companies, as Jesse Livermore called them over 120 years ago. So we move through to have a look, and we're going to see where these clusters come through. They first started to run in November, but these dates here is what's becoming quite critical. The breakout dates, one after another. We see 11th of November, 15th of November, 23rd, 25th, 30th, kind of close, and then it starts to get stretched out, 8th and 10th of December, then 17th, 21st, 30th, and so on. That's that run up here. This congestion here, 22nd of March on the right-hand side, 22nd of March, 25th of March, 29th, and 4th of April, 7th of April, 14th of April. They've all broken out around the same time. So when one starts breaking CIA, we see MGX, HIO, and DRE following suit. Doesn't mean they're all going up on the same day, but they start triggering each other in that domino effect. And then we're going to come into the proprietary indicator of the launch pad, because these vertical black lines here are the critical point. This is where the indicators are tipping off. Okay, it's time to get in there and have a look at the iron ore space, understand those trades, look at it for VCPs, look for good risk reward, and position yourself for the trade. That's when we start putting iron ore companies on our watch list. So that moves us over to what we have, the broader studies here. We'll get rid of this chart. We'll have a look at the broader studies to highlight another aspect of the iron ore thematic that we've seen in the last few months. This is the proprietary indicator that we're looking at. So what we're looking at here is the launchpad indicators. As the orange goes up quickly while the blue is going down, that's the time that we're bringing them to our watch list. So these yellow highlights you can see on screen are when the RSI for the group is falling and the launchpad is rising. So the launchpad, think of that as the orange line as our indicator. It's best suited when the RSI for the whole group, when you're seeing that fall and tank. Putting these together, so that's the focus group that we're looking at, and that's when it comes to the front for us. On this chart here, where we have the highlights is where we have the vertical lines. So this is the proprietary indicator that we're plotting. And we do have the Launchpad videos. We give you some insights on Fridays with Gary Glover. But these highlights are when we're being indicated to have a look at them. That's what we're seeing on the chart. We're seeing orange up, blue down. If we have a look at these highlights, that's the indicator that we're seeing. We come back and understand the importance of this timing on the futures contract mapping and plotting where the breakouts have been on the ASX. Here's where the overlays are. This is where we've been highlighted on the proprietary indicator, the Launchpad. That's what we're seeing here. So we've missed Fortescue on the 11th of November. We've missed LCI's first breakout, the buy will gap up on the 15th of November. But it's coming to the front. HIO, 23rd of November, it's pointing to us. This is when we're looking at iron ore companies. That's a base breakout. Then there's a volatility contraction pattern, GRR, on the 25th of November. 30th of November, we've got BHP having a double bottom breakout. Then there's CIA on the 8th of December, head and shoulders or inverted head and shoulders bottom, whichever one you like to call it. That's a breakout. And then just 10th of December, GRR. So let's just have a look at the first three here, FMG, LCY, HIO. We'll bring these charts over. So FMG, we know that one in November. We're going to spot that one easily. There it is. There's the VCP, big VCP there, and then the breakout. Next one was LCY, a lower cap company, but it's still going to prove the point for us. In November, we see that breakout and shoot. Not a long trend, a couple of days in that movement, but solid breakout. They're the two that we missed. Then it kicks in. What's the first one? It's HIO. It's the first one that it's coming up on the indicator. And there it is in there, November. This is when iron ore companies are being identified in the Launchpad as the time to break out. It's minuscule based on that rally, but this is the base that it's coming out of. This is where it's being indicated, okay, we want to be trading iron ore companies. That's the first one for HIO. We also have GRR. See that in November. Here we are. This is the breakout for GRR. We've just been tipped off to be looking into iron ore companies. And then the next one is BHP with the double bottom. There we go, double bottom BHP coming in here with a gap up 23rd of November and pushing up above the swing high just over here in the early December period. We also have CIA, the same region. This is that cluster that we were looking at. CIA turning that corner as well. And the last one I can't see without, let's open this up so we can see the final code. GRR. That's one we looked at before, but let's put it on the chart for comparison. In November, we see that breaking out as well. Here's your first breakout, 25th of November. We've just been tipped off here that we want to be getting involved with iron ore companies and away it roars. These black vertical lines are what we want to be looking at, and that's what we're identifying with the Launchpad companies that we're running through. That's it for today. That's all we're going to cover on proprietary indicators. We are plotting these and monitoring them, and that's the iron ore thematic at the moment. Can it continue? We've seen these domino effects, and what we're looking for is the next time to buy is when we have another black vertical line on the Launchpad telling us it's time to get in and really study the iron ore companies. Thanks for joining us. If you like the video, support the channel and click the thumbs up. Subscribe for the updates, whether you're getting shares in play, bringing the top themes to the forefront, Launchpad, which we're doing on Fridays to understand when these companies are poised to break out, or other updates like this.